If you've been on social media lately, you've probably seen someone talking about an Index Universal Life Policy, or an IUL. They call it all different things. A rich man's Roth, be your own bank, secret to a tax-free retirement. You may have even gone as far as asking your financial advisor if they think it's a good idea. And they probably told you they're expensive, they're not an investment, buy term and invest the rest. So, what's the truth? Are IULs the single greatest thing that you could possibly invest in? Or are they a scam that greedy insurance agents push on an unknowing public? I've been selling life insurance as part of financial plans since 2007. And over this 5-part video series, I will try my best to break down IUL in the simplest terms possible. I'll start by saying this. 90% of people who sell IUL have no idea how they actually work. They make a lot of promises that are simply untrue. They'll say that there's no risk. Of course there's risk. It's an investment. They'll say that you can't lose money. Of course you can lose money. It's an investment. Now, the risk might be minimized because of the way an index works, but it's not a guarantee that you cannot lose money inside of an index UL. They focus and say the worst you can do is 0%. Well, that's kind of true. Most policies do have a 0% floor, but not all of them do, and that doesn't mean that the cash value can't go down. They'll also say that you get tax-free income in retirement. Well, that's true if it's structured and monitored properly, but if it's not, these can become an absolute tax nightmare. So, knowing all of this, do I still sell IUL? Absolutely. The most important thing when buying an IUL is being fully aware of how it works and the risks that are associated with it, just like any other investment. You need to find a product that fits your specific needs, not a cookie-cutter off-the-shelf product. Those are the ones that worked most efficient in retirement. So what about the advisors that say that they're terrible and you should stay very, very far away from them? Well, a lot of them just don't understand how they work. See, an IUL is an insurance product and most financial advisors don't really dabble in the insurance side of the business. They're focused more on 401ks, investments, mutual funds, brokerage accounts, managed money, IRAs, things like that. And although those are great, they don't solve everyone's needs. An IUL is just a diversification tool, a tax diversification tool that a lot of the financial community ignores. But what very few financial advisors actually tell their clients is how traditional retirement works when it comes to taxation. That is the reason that people are starting to use IUL. The second reason that financial advisors tend to steer clear of these products isn't because it doesn't fit your goals. A lot of times it doesn't fit their goals. You see, when a financial advisor builds his practice, insurance is not a part of it. So when they're looking to sell or move their business, the insurance aspect doesn't really give them a lot of value. So it's not what's best for you, it's just not what's best for them. Even if some advisors have personal reasons for not recommending an IUL to their clients, what about the claims that it's just not a good investment? Well, it is true that in a really, really good market, the gains on an IUL are capped at a certain level. But with that limitation of growth does come protection of losses. Again, not all policies are guaranteed not to lose money, but if structured properly, most do not allow you to lose money on the investment side. So you're giving up something on the upside to protect your downside. Looking back over the last several decades, there are segments where just being in a plain investment account would have outpaced an IUL or an indexed account. There are also some segments where an indexed account will have outpaced normal investments. It all depends on the timing, and no one can time the market. However, there is one thing that an IUL can offer that no normal investment account can, and that's called arbitrage. I'll get into what arbitrage is and why it's so important in a later video. Lastly is the claim that IULs are expensive. And while that's a very general claim, and there are so many different types of IULs and designs, it's not really due a general response. I will say, yes, they are expensive, especially the ones that my clients buy. But They're expensive early. The way we design our IULs, and this is just the way we do ours, is we condense most, if not all, of the major fees into the early part of the policy life. We do that so when the cash value is early on, you're paying a higher percentage on a lower amount. This allows the policies to be much less expensive later in life. You'd be very surprised to see that if you compared a managed money account at 1% total fee over 30 years, most of those accounts will be very much more expensive than the fees inside of an index universal life policy if they are structured properly. In the next video in this series, we will go through how an IUL actually works, all of the charges, all of the expenses, and what the cost of insurance does over time. Understanding the way that these policies charge you will give you a better idea of whether or not this is right for you. It is beyond important to really know how the underlying policy works before you worry about it as an investment. So, with all of this back and forth, is an IUL a good idea? Who knows? Everyone's different. It's important for you to learn how they work before you can decide whether or not they make sense. I have clients that fit the mold perfectly for an IUL. I have others that don't, and they just buy term insurance and invest in other ways. But if you're looking for a tax-efficient way to save money long-term with the potential of tax-advantageous income in retirement that will not offset your Medicare expenses or decrease your Social Security while not raising any other taxable income, maybe an IUL is something you should look into. Continue watching the IUL series to learn how they work, how the investments work, if it's right for you, and more importantly, how we actually get money out of these things. Thanks.